Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. To start things off, I thought this was incredibly interesting. I saw the actual interview about a day or two ago, and I think it is something that a lot of people should pay attention to, especially if you are in the cryptocurrency space. Without further ado, let's just jump right into it. Anthony Pompliano, who works in Morgan Creek's digital assets division, told CNBC's Squawk Box on Monday that he believes the Bitcoin price is essentially going to bottom out with an 85% reduction in value from its previous all-time high. Prefacing that his forecast is based on previous experience in the crypto markets, he said, and I do quote, 85% from the all-time high is about where we'll end up. Puts it around $3,000. Came close over the weekend, but probably a little bit more to fall, end quote. He went on to explain to the host, who spoke of lost confidence among Bitcoin investors and the prospect of them returning to the market following their recent heavy losses, that he feels Bitcoin was overvalued and is now seeing a healthy correction. He said Bitcoin was overvalued in December of last year. There's more sellers than buyers this year, so the price goes down, obviously. But there's three things you got to remember. The first is, this is a transaction settlement layer. It's the most secure in the world. It's got to be worth something. It can't be worth zero. The second is it's the best performing asset class in the last 10 years. It's outperformed the S&P, the Dow, the NASDAQ, etc. during the longest bull run. And so it experienced two 80% drops during that time, but the asset's still up over 400% in the last 2 years. And the third thing is that was all done by retail. To touch a little tiny bit onto exactly what he's saying, if you ever question why institutional investors or just rich people in general, why they're getting into the cryptocurrency space, crypto has outperformed every other asset that we've seen. Not even the last 10 years. It was actually almost impossible to get returns like we saw on Bitcoin, on Ethereum, on XRP, on Litecoin, on anything. Then most assets that have been around for maybe, let's say, 60, 70 years. Once the gold standard ended, somewhere around that time frame-ish, and everything started really like shooting up in price. This is when we saw, relatively strong returns on things like real estate and other investments. But even still then, I think from where we were at the very beginning when Bitcoin was worth less than 1 cent, I think Bitcoin's returns over the last 10 years, I think it's over 1,000,000%. It's somewhere, it's an absolutely crazy number. Even a lot of other cryptocurrency assets like last year had like 15,000% returns. These are not numbers that you see. This is why we've outperformed everything else, and this is why there's like a huge arrow pointed towards us, because everyone desperately wants into to get inside the cryptocurrency space. And the third thing that he said as well is probably one of the most important, and I mentioned this many other times before, is we got to $20,000 in Bitcoin with us. Like no one else was really involved. There may have been some other, like rich people who had bought in early or, so and so and so. The fact that we got up that high for Bitcoin's price with just, if you want to call us normal, everyday, average people, this is why there's such a huge interest towards cryptocurrencies right now, because if we can do that, what happens when the billionaires then come into the space? And this is why people are throwing around numbers talking about any Bitcoin anywhere from 50,000. I think that one of the lowest numbers that I've seen, like a lower estimate of crazy numbers, is like 180,000. I think one of the higher ones was anywhere from $250,000 to 330,000, somewhere around there, over the next 2-year period, rather, when the bull market starts, and then a 2-year growth after that, which is still completely insane. Like you just won't get returns like that unless you are extremely lucky and you find a stock or a company that is getting ready and they're about to explode and they're about to take over Apple. It is extremely rare. And the fact that you can, or you were able to, or even right now, put your money into a couple of digital assets and get those returns, it's just absolutely out of this world. But yeah, another commentator on the show asked why the Bitcoin bubble would have a different outcome than tulip mania, referring to the 400-year-old story of tulips being extremely lucrative in Holland and then going out of fashion, crashing the bulb price. Tulips were one of the earliest futures markets as a result. Bitcoin, in reality, has a lot more money than the tulip bubble ever could have generated. Even a crashed market would likely outsize the estimated size of the tulip market at the time. Pompliano said, and I quote, "I think what's important to remember is that through 2017, all of the buyers were retail, right? And so now what you're seeing in 2018 as the price goes down, you're starting to see some institutions come in. And one of the things that doesn't get talked about much is that much of these institutions are not buying on exchanges. They're actually buying over the counter, which we don't have great transparency insight transparency or insight into. So what I think you're seeing is the washout of these retail investors. And I remember when he said that, it almost struck a chord in me, simply because I believe this is exactly what's been happening. I mean, you can't tell people not to be afraid about what's happening in the cryptocurrency market. You can't tell them, oh, prices are going down. I hate the term hodl. I think it sounds a bit special. But you can't, it's impossible to tell people just to hold on as they're losing money. But this is exactly what they wanted to happen. I'm slowly seeing, and I think you're also witnessing it as well, a lot more people are starting to finally focus on the fact that a lot of the buying is being done over the counter. It's not going through cryptocurrency exchanges. Someone asked me in the comment section, actually multiple people the last couple of days, they were asking why prices aren't going up if people are buying OTC, because I guess they didn't really understand what OTC meant. It pretty much means over the counter. Like, it's pretty much, let's say you walk, like, the simplest way would be, instead of going onto Coinbase, or I think it's called Coinbase Pro now, where they trade cryptocurrencies back and forth. Imagine just being able to walk up to the counter, say, I want this many so-and-so and so. Here's my Visa card. And here's my Bitcoin address. This, like I said, simplest way. This isn't exactly how it works, but this is kind of the idea behind it. They would swipe your card, charge it to you, and you would give them your Bitcoin address, and they would send it to you. It never really goes through an exchange. It goes through their cold storage. This is why we don't see it on what's it called? On the actual like CoinMarketCap and all this other stuff where they're showing cryptocurrency volumes, which is also quite interesting. And I'll try to remember to get into it later on because CoinMarketCap is going through a couple of things, and I don't know. Not really that important. Anyway, so when I saw all of this, I thought it was incredibly important. This is a complete, it's not even a partial washout. And I said this other videos before, and people thought that I don't know how people keep misconstruing my words. I don't know if it's just people like playing jokes in the comment section. I was saying that I think that crypto is just for the rich now. That wasn't me saying that there should be no poor people in it, that it's not for everyday, normal, average people. Someone said no Bitcoins for everyone. Yeah, I got that. I know the Bitcoin is for everyone. The point is that rich people don't want Bitcoin to be for everyone. They want it to be for themselves. It's about bragging rights. It's about how much money you can make. If you've ever watched documentaries, if you've ever seen like really rich people interacting with each other, they brag about how much money they have. They brag about how much they did this, how much money they got off of this, and if the other person didn't get it, there's a certain essence of bragging rights whenever you can make this amount of money. So when we have a market right now where you can potentially put in, how much is Bitcoin right now? It's like 4,000 something, where you can put in 4,000 and potentially in a couple of years have made $250,000. The elite, and I hate saying elite because it sounds very like tinfoil hattish sometimes, but they are. They have made themselves, or they think of themselves as the elite of the world. When they have something that they believe that they probably, maybe by birthright, by manifest destiny, who knows exactly what they're thinking, that they should control, they're going to do everything in their power to make sure that prices go completely down so that they can buy as low as possible so that they can have the highest returns. There's a reason why the world kind of is why it is right now, like with I don't want to say inequality. I'm kind of getting off topic. The point is, a lot of people are saying that Bitcoin is going to bottom anywhere between $1,500 to $3,000. These are the numbers that we have been quoted for quite some time that people are analyzing because they desperately want the bottom to happen. A lot of people think we would be better off if we just simply don't do this. If people in the market just simply sold, slam down to the heavy resistance number, and then the market could just kind of shoot back up from there. We'll hit it eventually. At some point, we do have to eventually hit a bottom, like he said. It can't be worth zero. It's a payment system that everyone in the world has access to. But yeah, let's move on. Next up, Overstock is in the news. Overstock plans to sell its decades-old retail business in the next few months to make way for a full-blown bet on blockchain. The previously announced sale plans could go through as soon as February. The company's CEO told the Wall Street Journal in a report published on Friday. Overstock founder and CEO Patrick Byrne, an ardent believer in the technology that underpins Bitcoin and other cryptocurrencies, declined to name any of the potential buyers. Shares of Overstock surged as much as 26% on Friday, but the stock is down 66% this year. Byron founded Overstock in 1999 to sell goods like furniture and jewelry on the internet. The Salt Lake City-based company has invested $175 million in Medici, which has been burning money since its 2014 inception. One of its best-known startups, known as T0, a trading system that hasn't launched commercially, is also burning money. They say, I don't care whether T0 is losing $2 million a month. We think we've got cold fusion on the blockchain side. This made headlines recently simply because Overstock was one of the first companies that we had in the entire world who was accepting cryptocurrencies, and more specifically Bitcoin. So it was many, many years ago. There was a huge amount of fervor, and to be honest with you, and this is kind of the easiest way to say this, when Overstock announced that they were going to be accepting Bitcoin, I think the price of Bitcoin actually went up because everyone was kind of euphoric that a major company was going to be accepting any type of cryptocurrencies at that point. But a lot of people were actually a little annoyed that it wasn't someone like Amazon or eBay. So Overstock has kind of like been at the forefront, but still standing behind the gates. So the fact that they have announced that they are going to go full-fledged blockchain / cryptocurrency, I guess, and getting rid of their retail business is, I mean, I don't think Overstock's revenues beat Amazon. Probably not. And I want to see exactly how deep the rabbit hole will go, like exactly how they're going to try and build this. If they're focusing on cryptocurrencies, I think there was also something, I don't know if it says it in this article, not exactly sure. Yeah, here's their stock that fell, and it's not too great for them. There was, I'm not sure if it was an announcement or if it was just speculation that they also planned on selling cryptocurrencies on their platform. Like they're going like completely crypto and blockchain. Like this is supposed to be the entire move that they're doing. This is why their stock went up by 26%. Because we saw last year as well, whenever someone or any company added the name blockchain to their name, there was one company, I think their stock went up by like 144% over like 2 days. There was a lot of fervor and a lot of energy floating around the space. So I wonder if they're going to try and be a cryptocurrency exchange. I wonder if because if they're selling cryptocurrencies, I guess it would be kind of weird of them not buying them, but having an exchange on their platform. I guess we'll get more information as we swing into the new year, as time is flying by and it's already almost the end of the year. But this is quite interesting. I hope they end up doing well. It would be kind of sad if one of the first companies to ever allow cryptocurrencies as payment doesn't end up making it. Hope they have their marketing done right so they end up making it. Like I said, it would be kind of sad if they are one of the pioneers and then end up falling. But yeah, let's move on. Here's one that's quite interesting. Tapatalk, the mobile form application with an aggregate registered user base of 300 million people, has struck a deal with the Kin Foundation to reward its users with cryptocurrency for posting quality content on the platform. Announced on Wednesday, the partnership will see Tapatalk, whose platform hosts 200,000 forums based in 186 countries, seek to build engagement by rewarding users with Kin tokens for creating worthwhile content. Tapatalk's integration of Kin marks a noteworthy development in our expansion to reach new users and cultivate further engagement with the broader forum community. This was said by Winter Wong, that's an amazing name, CEO of Tapatalk. The mechanics of Kin will surely benefit existing forum users while bringing new users into the fold of vibrant, active online discussion communities. Tapatalk will also provide users with the ability to tip one another using their Kin balances, similar to the variety of third-party cryptocurrency tipping apps that are popular on Twitter and Reddit. People contribute to the online communities on a daily basis, but there isn't an easy way for them to reward other users for their contribution to the discussion. We believe that Tapatalk will be a strong example of how Kin easily facilitates peer-to-peer transactions in apps once users begin rewarding each other for the creation of meaningful, engaging content. In June, Kin announced that avatar-based social media IMVU would allow users to earn Kin on their platform through the partnership has not reached the implementation stage. Remember, I said a couple of weeks ago, I wonder if Kin is going to be smart enough and actually make something like this on their platform where when you have I can't remember the name of the apps. I'm sure there are hundreds now. Years and years ago, had to be 2 years ago, there were apps that were based out of China that you could get, you could still download them on your normal mobile device. They pretty much had them where you could chat with people, live stream with people, you could watch people vlogging and all this other really interesting stuff, and you could reward them if you would for their content, for what they were posting, for what they were doing. The fact that they have 300 million people, I wonder if they're going to do some type of an airdrop situation. Rather, if you have if you have their app, if you will automatically get some Kin, especially since the price of Kin is relatively low at the moment. If you can reward every single person with around, let's say even 10,000 Kin, 1,000 Kin, and that starts going through their system. So what we have now, and I want people to slowly pay attention, when you talk about actual use cases for your currency, this is why I've been heavily bullish on this project since the very beginning. Everything that the Kick team has done is make sure that they are making apps that exclusively use their cryptocurrency, not any other crypto coins, exclusively Kin. They're now partnering with Tapatalk, who has a 300 million user base that are all going to get the cryptocurrency, and they're going to be allowed to use them on their platform as well. They'll also be, if you are able to also, I don't know, well, I assume it's a speaking platform. You can send texts and stuff back and forth. I assume you'll also be able to give your friends money and stuff like that. I think it's incredibly interesting what they're doing. And I'll note this once again, just for the sake of money. The Kin token hit 1 decimal place before 1 cent during the last bull run, and that was before we had 15 apps confirmed that are using the Kin token, and before we have this one who has a user base of 300 million people. And there are still, I think, 15 other apps that are going to be using Kin as well that we know about, that we had news about a couple of months ago at this point. I think they're going to be one of the largest platforms, largest or most used cryptocurrencies that we actually have out there, especially since the CEO of the Kick something, he said that he is aiming to make sure that Kin could potentially become the largest or most used cryptocurrency in the entire world. And I think they're well on their way. At some point, I think this coin could easily hit, and I know it sounds like a low number, but if you pay attention to the price right now, I think it could easily hit 1, 2, or 3 cents. And that could spell for very, 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 very big returns. But let us move on. Next up, 10 financial services and technology firms active in the cryptocurrency space have joined forces to launch the Association for Digital Asset Markets, or ADAM, in order to establish a code of conduct for the emerging asset class in the United States. We spoke about, ADAM was in another article that we spoke about yesterday, but there wasn't a clear thing as to exactly what ADAM was. By working with current and former financial watchdogs, the association will seek to provide rules for efficient trading, custody, clearing, and settlement of digital assets, thus defining the standards for digital asset market participants. ADAM's guidelines will focus on ethical behavior by firms within the industry, increased transparency with regulators and the public, and deterrence of market manipulation. The code intends to complement the existing laws and securities regulation in the U.S. in order to earn the trust of financial watchdogs and policymakers. Rules are fundamental in any market, said Duncan Niedernauer, former chief executive officer of the New York Stock Exchange and ADAM advisory board member. He said over 200 years ago, the market leaders came together to draft rules that led to the creation of the New York Stock Exchange. The advent of digital assets required a similar effort, one that will clarify existing rules and give both investors and regulators the confidence necessary to sustain the market. So this is actually a 1.5, a 2.0, or rather an addition of what we actually seen before. A couple of months ago, we had information that the Winklevoss twins were trying to create their own association of, I think it was them and only 2 other cryptocurrency exchanges that came together, and they were trying to be the face of the rules for the cryptocurrency, or like the code of conduct, if you want to call it that, for the cryptocurrency space. It was kind of very similar to this, but this one seems to be a lot larger. I.e., this is 10 crypto firms, and also the New York Stock Exchange, the chief executive officer of the New York Stock Exchange, who is also on the board of Atom. I feel like this one will have an easier. I feel so bad for the Winklevoss twins. It's like everything that they do in the cryptocurrency space like does okay, and then just kind of like falters to the side. The point is, I do commend them in some capacity for doing what they do and trying to bring the cryptocurrency space forward, but they tried to do something very similar to this. We haven't heard anything about this or that since around September, so I can only assume maybe it just didn't pan out too well. But as of right now, it seems like this one will be a bit more solid when you have the New York Stock Exchange behind you, and as one of the members of the Association for Digital Asset Markets. I assume this will be the go-to for the next couple of years at least, because for those who don't get it, the cryptocurrency market, or rather the largest names in the cryptocurrency market, are trying to self-regulate. The idea is that if the SEC and the CFTC are going to be watchful over the cryptocurrency space, it is probably better if you have cryptocurrency firms, people who are in the industry, who can have a code of conduct and write up certain rules that, or like a paperwork that can then be sent to the SEC every quarter or something like that, to tell them exactly how the market is going, as opposed to the SEC completely hovering over us with their shadow, so that they, first of all, people in the SEC, many of them probably don't have an exact idea of how the cryptocurrency market works, what it is, what a blockchain is, how a blockchain functions. So it's nice that I'll put it this way: if we're going to have regulations and we can't get around them, it's nice to have people who are in the cryptocurrency space, who maybe potentially, hopefully, have our best interests in minds, setting the rules for exactly what's going to happen, as opposed to governments doing so in their place. That's kind of the easiest way of saying it. But yeah. Just a couple of things to finish this off. Apparently, there's part of a report that I think, I'm not 100% sure if this has actually been confirmed, but it seems that based on the SEC rules that people throwing around, running ICOs may now be restricted to raise funds anywhere between 1 to 50 million, and I guess 50 million would be the actual cap of it. And I think it says somewhere around here they're doing this as a way to, like, if you're not running an IPO, which is what people normally run, it says it's somewhere around here. Here we go. These regulations allow projects to raise funds between $1 and $50 million, unless that's $1, without having to run an IPO. IPOs are very costly to run and allow only a few investors to participate from them. IPOs are usually when you are trying to like set up like a stock offering on the stock exchange. So it appears that the 1933 Act of Securities is now going to encompass in some way fundraising for ICOs, and will only allow a certain, to be fair, no one really needs $50 million to create a cryptocurrency. I think in some ways I've heard developers talking about this, and they said if you want to create like an app that sells, sometimes you may only need like $500 to $2,000 to make it be, something like Flappy Bird, something relatively simple that, millions of people can play. And when you're trying to create a cryptocurrency, they said usually if you have like an okay team, it maybe costs around $5 million. So we've had other ICOs that have raised billions before in the past. So one can only assume that those projects should, in theory, be doing excessively well. The point is, it's nice to have some type of information about ICOs and exactly how they're going to be seen or viewed or whatever the case might be. There are a lot of people, and there was news about this yesterday as well. Someone said that they think that ICOs are completely dead. They're like, all the hype around them is completely gone since the SEC. I think they shut down like 15 ICOs over the last 2 weeks. So everyone's kind of afraid to even run an ICO. Even I think because of jurisdiction and the long arm of the law, even if you are in like Thailand or some other place and you launch an ICO and you allow that people in the US are also able to have some of your new tokens, you are then also somehow breaking security laws in the States. and they can subpoena you or send you something that you have to then pay them from your other country. It's all kind of weird, but nice to hear that there are rules around all of this right now. A part of this as well, I was watching as this was actually happening, and I thought it was actually kind of weird. So a little bit of an insight. It says Federal Reserve Chairman Jerome Powell praised the strong U.S. economy in a speech on Wednesday, sending stock markets higher after seeming to forecast an eventual end to the central bank's series of interest rate hikes over the past 3 years. They said interest rates are still low by historical standards, and they remain just below the broad range of estimates of the level that would be neutral for the economy. That is, neither speeding up nor slowing down growth. Stock markets immediately soared on the statement, which investors interpreted to mean that the central bank would slow its pace of rate hikes over the next year or so. The Dow Jones Industrial Average gained so-and-so, blah, 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 everything went up. For those who don't understand what the point of the interest rate hikes are, if you are trying to, it comes down to free money. If you are trying to buy something and you take out money from the bank or something like that, you are typically paying based on like an interest rate. And we have instances, rather, let's say you're trying to take out $1 million and the interest rate that you have to pay back is around 7%. People may be willing to do so, but they're kind of like, a little, maybe not, maybe I'll hold off a tiny bit. But when you have interest rates of around like 1 to 2%, you're pretty much essentially, some people say that you're getting almost free money for what you're doing. And this is why you'll see a lot of growth whenever you hear in the news that interest rates are extremely low, and they have been historically for quite some time. It's because that they're trying to boost up the economy, because the lower the interest rates, the rate that you have to pay back money, the lower that is, the more people are going to start borrowing to do other things that they want to build up and want to grow and want to invest in. But when interest rates are higher, the stock market typically tends to do a lot worse, because it costs a lot more money to be able to borrow to be able to invest. So the fact that they have indicated that they were going to slow down potentially, this is what people interpret it as, the pace of rate hikes over the next year or so, especially because we're still at some of the lowest that we've ever seen over the last couple of years. The world governments in general have been trying to make sure that people have space for the economy to grow. If you raise interest rates, nobody's going to want to borrow the money. The lower the interest rates, the more money people will push into the economy, and this is why we're seeing all this record growth that's happening. But when this happened, the stocks went completely up. Everything shot up. I don't know if they have like an actual, the chart over here. Everything went crazy. What I found relatively interesting is that around the same exact time, this is when the cryptocurrency market also shot up. People have been asking for a very long time if there's some type of a correlation between the cryptocurrency markets and the traditional stock markets, and it's looking like they're a lot more correlated or connected than I would like them to be, simply because when the stock market was doing not too great, couple of like the last week and a half, cryptocurrency prices were also tumbling, and when the stock market was doing well, cryptocurrency prices were going up. And this is why we had news a couple of days ago as well that a lot of people, first of all, like tech stocks, companies that deal in technology, when their companies are doing bad, people tend to also then, the idea is take their money out of cryptocurrencies as well, as we are also a risky investment, and we all also deal in technology in some capacity. My problem is that if we are following the stock market's trends, and the stock market does then have a stock market crash, what will that mean for cryptocurrency? I think that the New York Stock Exchange, the NASDAQ, Fidelity, everyone else, I think they see what's coming. This is my opinion. I think they are looking over the river. That's not a saying. I think they understand what could potentially be coming in the next year or so with the stock market, and this is why I think we're getting people calling the cryptocurrency market the stock market 2.0. I think we need the New York Stock Exchange at this point and Fidelity and NASDAQ to open up whatever they're going to open in the beginning of the year, so that crypto prices can decouple from any type of connection that they might have from the normal stock market. It's a bit troubling that we are closely attached to them like that. I think we need a massive, not even just a massive surge in price. I think crypto needs to, first of all, crypto has an enormous amount of good news nonstop all the time, but I don't think it's translating into like traditional finance places. Like when you look at news from like CNBC or Bloomberg or Forbes or any other place, they usually, it's always like crypto did well, but crypto's doing exceptionally well, but crypto has gone up by 25%, but we're still in a bear market. Prices could move lower. Crypto's extremely risky. Like, and we need the tide to completely turn. I don't know when that's gonna happen, and I don't even mean like just like price wise. I think the actual rhetoric of people in traditional finance, like their wording has to change, and it's going to happen eventually. And I can only assume that they've already softened up to the cryptocurrency space simply because of what's it called? Because of all the institutions who own them, who are now getting into cryptocurrency as well. But yeah, that's the correlation news, I guess, if you will, for today. The market's still in green. It's nice to see that it's doing relatively well. By the time I was going to sleep, the market was slowly going back down. I hope that we get more of a momentum to go back up. As of right now, people are saying potentially that we could have already hit the bottom of where Bitcoin is or should have gone, because we bounced off. I think we hit 3,700? We seemingly bounced off of that around this point, going back up. And if I don't think we'll hit 5,000 anytime soon, but hitting 5,000 would be a very nice indication. I don't know when we're going to hit that magical 10,000 number. People are still calling, even after this bounce, people are saying that it's a dead cat bounce. I'm pretty sure you can estimate exactly what that means, that the market is still going to go back down. And this is why we have news, people talking about that the price of Bitcoin will bottom or hit the lowest that it's going to go when we hit around $3,000. Nobody knows, but it's still fascinating as the wheel turns. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening. Wherever you are, wherever you might be, I hope it's absolutely amazing. Thank you once again for watching and or listening. I do appreciate all of the support. And yeah, I'll talk to you all soon. See you.